But let's in fact take an overall look with the markets right now, because I understand joining us now is Mayuresh Joshi. He's fund manager, Angel Broking. Mayuresh, a very good afternoon to you. What is at the top of your thoughts when you're looking at markets as well as the flow we're getting when it comes to news?
So afternoon, Fatima. No, so I think the top of the drawer obviously is crude, and crude is just not cooling off. Couple that up with the yield movement that you probably witnessed both on the US 10-year and the Indian 10-year. Though the Indian 10-year has cooled off with the announcements done in terms of the OMO purchases expected over the next few weeks, I think these are two key macro factors that the markets both globally and domestically should watch out for. On the other hand, you're probably looking at next week's elections and the election outcome thereof. So what happens in terms of sentiments related to this outlook or the election outcome is something to be watched out for. And from an earnings perspective, I think the earnings have been quite reasonable so far. So few companies within the banking space have delivered strong set of numbers. A few of the large IT companies, mid-cap IT companies obviously have delivered well as well. And with the rupee depreciating against the dollar, there are obviously tailwinds for this sector as well. With oil on the rise, again, I think a lot of the crude oil derivative related segments which have a significant bearing in terms of input costs for a lot of industries. I think paints, you're probably looking at OMCs, you're looking at aviation stocks. There is, I think, the earnings sensitivity with crude staying at elevated levels might act as a hindrance. So largely, again, I think there are a lot of moving parts in the market. So the view that I've been maintaining, the market's probably expected to stay in a range. I think continue with that view. I think it should be a stock-specific bottom-up approach in markets like this.
Yes, in markets like this, they require that kind of sage approach. All right, so that's Bharat's view. Mayuresh, what do you make of the kind of threat he sees or the headwinds that he sees when it comes to Jaguar and Land Rover? Of course, there is a surprise where he's concerned on the positive side this time, but that may not sustain as far as US, no, not US so much, but UK and Europe are concerned. What do you think could likely happen with Tata Motors going ahead from here?
No, so a large element, Vikram, in terms of consistency numbers, which I've always maintained, should start coming through. And unless we derive the consistency for Tata Motors specifically on the JLR front, I think it's a very difficult call to make whether they'll be able to sustain the earnings momentum that was actually seen a few years back. So I think consistency in volume numbers specifically from the Eurozone is something to be looked forward for. The Chinese JV is working absolutely fine. So I think there are no complaints in terms of numbers reported out of the Chinese JV. And the US numbers, again, I think have been quite reasonable with the Trump rhetoric in terms of what probably happens in terms of import ban and so on and so forth. I think the Eurozone area is something which is of paramount importance for JLR. So the new platforms that are expected to come through, I think will clearly drive earnings growth, but I think one should look at consistency. So valuations is very, very attractive at this point of time. But again, I've been maintaining that why look at Tata Motors? Why not look at Tata Motors DVR? Because the discount has widened even more. If you're probably betting on this story over the next 2 to 3 years, I think both from a valuation perspective and playing Tata Motors, I think Tata Motors DVR is a better way to play this stock.
All right, Mayuresh, I'm going to get into what markets are making out of Donald Trump in just a few moments. But let's talk about what we're seeing with OMCs. Mayuresh, coming to you on this, we've been talking about oil on the boil, but I just want to understand from an investor's point of view, first of all, in terms of what we're seeing out of a Donald Trump, what do investors make out of the kind of announcements and the kind of no conventional rules, so to speak, that he seems to be following?
You're not really sure about Trump, Fatima, so I think he might change his view in the next 2-3 weeks. But largely, I think the announcements that he's probably done at this point of time and at this juncture is clearly creating the boil that you're probably seeing in Brent prices. The second element is also going to be demand-supply dynamics. So what you're probably talking about in terms of OPEC and non-OPEC supply disruptions and the cuts that they've created, and demand probably remaining extremely strong, because there was a very heavy winter over the last 2 months in the northern hemisphere. So I think oil demand was itself very, very strong. So large element in terms of inventory levels actually coming down. But again, with prices staying higher, I think the shale production should start coming through in the market, which basically means that somewhere down the line, I think you should see peaking off happening in crude prices and somewhere they coming down as well. But again, I think this impact, as Raji said, with prices staying at this level, what we had accounted for in the last financial year from an exchequer perspective was oil between 55 and 58. That's clearly moved up, which basically means that your import bill moves up substantially, anywhere to the tune of 8 to 10 billion odd dollars. And if it stays at these higher levels, what is the move? I think the expectations in terms of pass-through prices for OMCs, I think that is somewhere that I'm reading between the lines that will still continue. But whether any excise duty cuts will happen just to provide relief to the end consumer is something to be seen. And if they do take that cut, I think the budgeting that they've done of 10,000 odd crores in this year's fiscal roadmap, I think that also probably is a little bit of a question mark. So there are a lot of moving parts, but with oil at these levels, my own sense is that it should peak off and then cool off over the next few months.
Well, like you said, the biggest moving part is Donald Trump right now. But Mayuresh, what do you make of it? And perhaps your take on it should come with a disclaimer of how much you like pizzas and donuts. But do put that in perspective and tell us, when it comes to the entire consumption theme, how are you seeing Jubilant? Are you impressed with what it has done, or do you think that one should wait and watch a little bit?
Yeah, impressive performance. So I love my pizzas, my daughter loves donuts, so there is no two ways about it. But a large element in terms of the SSG growth of 26.5%, I think whether they'll be able to replicate that quarter after quarter, I think that's a little bit of a doubt. But whether they can do a double-digit SSG growth, I think that's absolutely on the cards. So what they've probably done with their everyday offers of 99 odd rupees, as Piyush was mentioning, and the mobile ordering, which is almost 65% of the overall orders online, I think that's a significant traction, because what it does, it optimizes costs, and with the innovations that they're probably bringing through, both in terms of technology as well as value added in terms of product offerings, I think that's a significant incremental earnings addition for the stock. The second element is also the reduction in Dunkin' Donut losses, so that stands almost at 118 bips compared to 240 odd bips, and they're very, very hopeful and optimistic of probably breaking even by quarter for FY19. So some of moving parts, I think 75 new stores expected to get added, so far lesser stores were getting added over the last 2 years. But incrementally, I think the revenue addition can be substantial over the next 2 years. What it probably does with the cost optimization program as well is that it increases the margin profile in terms of the EBITDA margins, and the operating leverage benefits should start playing out on the balance sheet. So strong growth can continue. The only hitch is valuations. So the consensus view is for a 60 rupees EPS for FY20. But again, looking at what the stock has done, probably I think the earnings estimate on the consensus can go a tad bit higher, which means that the forward P becomes a little bit more saner at that point of time. But still, I think it is a little bit expensive compared to its own mean averages and for the industry as a whole. So again, investors who are holding on to the stocks can play out on this growth story. But fresh investments, I think you need to probably wait for declines. If luck is your way, I think pizzas is something that you can have at this point of time. The stock can come later.
All right, Mayuresh, you're making me think about donuts and pizzas a little bit too much, and that too on a show like Lunch Money. But let's actually, Mayuresh, what should an investor that's holding on to Eicher Motors be doing at this stage?
No, continue holding on, and a clear disclaimer, we own this stock in our funds. So as Hiral was mentioning, I think strong volume growth still expected to come out of the Eicher Motors stable, specifically on the two-wheeler segment. As she rightly pointed out, I think the 350 plus category should actually report robust numbers as well. What they have probably done in terms of the capacity expansion at their plant is that the waiting period probably comes down a tad bit. And again, I think the base that they were working out of, I think to work at this base and keep on reporting numbers, I think that's a commendable feature itself. The second element in terms of its overseas business or the international markets that they're probably looking at this point of time, I think you should see significant traction actually starting to build up. And overall, in terms of the input inflation that you probably witnessed, pass-through is probably something that the stock or the company might have done. If there is additional pressure coming on that front, I think the pass-through is expected to go through. So I think the margins are to a certain element protected for Eicher Motors. On the commercial part of the business, the tonnage categories that it probably caters to, I think they're very well placed in that categories. The discounting factor for the MHCV, LCV segment as a whole, with strong demand dynamics expected to continue, with monsoons expected to be very, very normal at this point of time, and with very stringent norms coming in terms of overloading and the scrappage policy that is expected, I think you'll see significant traction even on this part of the business. On the sum of total parts, I think steady earnings is what the company can report in the near foreseeable future. So our premise is anybody is holding on to the stock, keep on holding.
Right. So you don't need to ride that bike and wait for upsides to this particular counter, right, Mayuresh? You would kind of bite into this immediately as far as the stock is concerned. That's what you're saying. We will let you go on that note and enjoy the rest of the trading session. Thank you for joining us. Always a pleasure having Mayuresh in our show, and we'll take a small break now. After that, we get